Everything you should know about before applying the home loan. So now in this video I will discuss that the main basic things that you have to know about for before applying the loan. So first of thing is that where you should start. When it's come to apply the loan, home loan especially, it's hard to know that where to begin. Finding the right type of home loan can be confusing because there are a number of different options to consider. Start by contacting your any vendor or consultant like A&M Mortgage Consultants and other consultants are also available for an evaluation of your plan and to see if you are pre-qualified for home loan. So some question you should ask yourself before begin the loan process include how much can I afford to pay each month the mortgage? This is the one basic thing that you should know about that the basic amount that you have, how much money that you have pay or you can afford for the money mortgage. Second thing is that how long do I plan to live and in the new house. So this is the second thing that is most important that you have to know that how long you will be live in this house. Is lowering third thing is that is lowering my monthly payment more important than paying the loan down quickly. So third factor that is also important that you have if you have paid the high down payment that it will be lower the your monthly payment. The fourth factor is that am I able to make down payment on the property? So it is also most important question about the down payment. Now five question is that you should know about that over how many year do I want to pay the mortgage. It's mean that how long the mortgage that will be remain. Now sixth thing is that do I need a new residential mortgage or I am refinancing or an existing mortgage. So it is also a basic question that you should know that about before applying the mortgage. The answer of this question will help you and your mortgage broker to determine the best plan for your future. Since there are a number of loan options available for home buyer, it is important to familiarize yourself with some of the basics in general. So the larger the down payment, the better your loan option will be in terms of the payment amount, interest rate, and the length of loan. Now, a fixed interest rate will lend to the higher than an adjustable rate. The longer the long-term payback for your loan, the smaller the monthly mortgage payment. So the smaller your mortgage payment, the larger amount that going toward your interest. Paying more to interest result equally begin build up more slowly. So now I'm take to the basics of law. So it's also useful to understand that the essential difference in type of loan available for the mortgage company. There are really only three basic type of loan. So first thing is that fixed interest mortgage that is called also FRM. Second called is adjustable rate mortgage that is also called ARM. Now third is hybrid mortgage means that a combination of FRM and ARM which is also called the fixed interest mortgage and adjustable rate mortgage. Loans are also classified as either government loans or conventional loan as well as. So now if I am talking about that the what is government loan or FHA loan. So FHA loan is that Federal Housing Authority was created by Congress in 1934 to help the streams and rising tide the federal ships to make home ownership and more affordable. While the FHA does not originate the law, it is the one of the largest mortgage insurer in the world, insuring the almost 47 million mortgages since its inception. So what is now I will take to look you that what is the FHA loan. The FHA loan are mortgage issued by private lender and insured by the Federal Housing Administrations. Lender can be bank, credit union or non-bank entity, but they must be approved by the FHA to issue FHA insured loan. So by working with the approval lender and the FHA help by lowering the risk of the residential loan issuer, which gives the more buyer access to the loan they need. Because the FHA insurance protects lender from borrower default. So FHA playing a pivot role or a FHA loan are more securable other than any other loan. FHA lenders are more willing to offer favorable terms to the borrower who do not meet the stricter Fannie Mae or Freddie Mac criteria. So FHA loan are also known for their flexibility because it has a more flexible in the terms and conditions. The famed flexibility also apply when the homeowner encounter the circumstances that impair their ability to pay the mortgage, such as loss of employment or reduction in income. So the FHA can provide the option to the distressed homeowner to help them for prevent foreclosures. So although the insurance cost associated with the FHA loan passes down to the homeowner, the borrower can phase out the insurance as the loan is paid off. The equity build up over the time secure the loan. So working with the mortgage broker for this type of the offer loan protection because the lender has to follow the FHA serving guideline. So in other terms that the FHA loan is a more securable in other loans provider because it is well known about their flexibility and in terms and conditions. So borrower can obtain the loan easily and quickly in order to determine the other criteria. So other lender have many strict criteria while FHA loan are have less strict criteria in order to giving the loan to the borrower. So that's all. So hope you will like this video. Take care. Bye bye.